Have you noticed that stuff is getting more expensive? Yep, it's all about inflation. Want to know what to do about it? Well, WisdomTree offers two potential solutions for an investment portfolio: WTIP, WTIP, and GDT. Let's break down what they are and how they're supposed to work. But most importantly, do they actually work? But first, a quick disclaimer. I am not a financial advisor, and this is not financial advice. The content in this video is for entertainment and educational purposes only. Past performance is not indicative of future results. Statements made are my opinions. Investing involves risk. Always do your own research. So, WTIP or WTIP is interesting. I'll give it that much. It's a relatively new fund. It just came out in June of last year. It's got a moderately high net expense ratio that could be problematic for some people. My philosophy is make sure you're getting what you pay for. A fund shouldn't necessarily be disqualified simply because it's a little pricey. It all depends on the value being delivered, right? So the product description is that it's basically just a tips stack, a tips ladder, and then they use capital efficient means to have some cash collateral on the side and borrow some commodity futures to stack on top. The line that really sticks out for me, though, is the fund will not invest in Bitcoin directly. Does it invest in Bitcoin indirectly? Yes, it does. The other thing to note here is that it still is on the light side in terms of total assets. It's only got about $23 million. So you're going to have very wide bid ask spreads. And that can cause some trading friction as you're adding it to your portfolio. Of course, I don't believe in trading funds in and out, in and out. I'm a buy and hold kind of person, so that's less of a concern for me. Um, Other things to keep in mind: year to date, it's done okay. It's been pretty volatile. If you go back 1 year, it's been really impressive looking. I mean, inflation has risen, right? And it's rising right alongside it. But let's look under the hood and see what's actually at work here. Oh my Lanta, that is a lot going on. Let's see. Structural innovation, evolving commodity exposure. Sure you are. Well, what this looks like to me is managed futures. So this is just essentially tips with a managed futures trend following stack. So in this chart, it says up to 5% is going to be related to Bitcoin exchange traded products, ETPs. So it says it doesn't invest in Bitcoin directly. It might as well be. It's investing in the spot price according to a trend following method. The commodities for its momentum based exposures are going to be energy, industrial metals, grains, and softs like sugar. So this is pretty standard stuff for a managed futures sleeve. Interestingly enough, it has a 15% structural layer that is always long gold and silver. And I'm guessing that's with the assumption that precious metals are going to go up during inflation. But there's a lot going on here, and I'm kind of curious why they didn't just go with stacking their own Wisdom Tree managed futures ETF on this, WTMF, and we'll get into how they might actually have done that. This is really just marketing copy, but it reminds me of a story that I want to share with you about how overcomplicating things can backfire. So, when I was about 4 or 5 years old, I went to my mother with this grand idea. I wanted to make an awesome shake. And to make the most awesome tasting shake in the world, I wanted to put all of my favorite foods into it and blend it up, and it was going to taste absolutely amazing. So, I threw in chicken nuggets. I threw in animal crackers. I threw in a chocolate bar. I put French fries and ketchup in there. And bless my mother, she was very patient and she believed that people learn best from trial and error. So she kind of just went along with it and said, sure, let's make an awesome shake to teach me a valuable life lesson. Did the shake taste awesome when we finished making it? No, it did not. It was a terrible, terrible drink. So the question is, did Wisdom Tree create an awesome shake here with WTIP? There's only one way to find out: reconstruct the strategy and backtest it insofar as we're able to. Now, while we can't replicate this strategy exactly, we can approximate it because after doing a lot of digging and some research, it turns out that WTIP is actually based on WisdomTree's Enhanced Commodity Strategy Fund, which, interesting to note, can also go into Bitcoin a bit, up to about 5 to 10%, according to the most recent strategy. So I started suspecting that perhaps this enhanced commodity strategy, which also involves staying long only on precious metals, might actually be the managed futures layer that's being put on tips for the WTIP fund. And WTIP has 85% in tips. It's got 10% in T bill or cash collateral, and then it layers on top this enhanced commodity strategy. And backtesting since inception of WTIP seems to confirm that for the most part, yeah, they are using at least a slight variant of the enhanced commodity strategy here for WTIP. And it's only been about a year since this fund came out, but looking at monthly and quarterly correlation matrices, we can see that at the quarterly level, these two funds, WTIP and my reconstructed simulation of the ticker, are at 0.963 correlation. So we can have a high degree of confidence that this is a relatively faithful approximation of the strategy and will give us insight into how it has performed long term. So let's just go ahead and take a look at it. I'm going to get rid of WTIP. We're going to focus on WTIP SIM, rebalance daily, so that we keep this strategy constant. And we'll know for sure, one way or another, if it has lived up to its goal of combating inflation. So we could see that it's a pretty high volatility strategy at 17%. Its longest drawdown was over a decade. The average drawdown has been about negative 30%, with a max drawdown of negative 62%. Before inflation, it has returned an average of about 2% um, compound annual growth. I mean, maybe it looks better with regular contributions. We can certainly try that. Give it $100 a month and see if that improves everything. I doubt it, but it's always worth a shot. Okay, so a money weighted return of about 3.32% if you were investing in this fund constantly. Um, so let's go ahead and adjust for inflation, though, because hey, this is an inflation combating fund, so it should be able to overcome inflation, right? Well, wrong. Its cumulative return has been about negative 12.58% on that initial capital invested. The money weighted rate of return is just 0.78%, which is, it's not good. If we can just add an asset here for comparison, just use cash and let's see, US tips. If you had just been holding tip bonds separately, I mean, it's better than nothing, but at the same time, it got clobbered in 2022, which is really a test case year for inflation. So, is it worth the extra volatility and the negative return on initial capital? I certainly don't think so. I think WisdomTree created an awesome shake here. But what about GDT? Spoiler alert, I actually like this one. I mean, I use it in the Badlands portfolio. Let's get into why. GDT is one of the newest additions to WisdomTree's capital efficient ETFs suite. And the capital efficient ETF suite over at WisdomTree is kind of WisdomTree's take on the return stacked concept. They don't usually go nearly as high on leverage as return stack does, but this particular fund is a 90% 90% exposure. So 90% tips, 90% gold. It has a much lower net expense ratio than WTIP because its holdings are much more straightforward. I mean, it's just gold and tips bonds. So as a new fund, it hasn't gotten that much in total assets under management just yet, but I have a feeling that as soon as people discover it, it's going to start taking off because gold and tips are a really, really cool combination to have. And to understand why this combination is so powerful, let's back up a little bit and talk about what tips are. So, they're treasury bills, but treasury notes just like you could get with IEF or GOVT, except these ones have the principal tied to the consumer price index, CPI. So if inflation rises, the principal of your investment is actually adjusted up or down depending on that actual inflation rate. In exchange, uh, you get a little bit less yield for this. So tips are great for unexpected inflation to safeguard against that. It doesn't mean that they won't go down during a period like 2022. They will if rates are being hiked because they still have duration. It just means if you're counting on fixed income and you need to have the same purchasing power coming from your bond holding, then tips are ideal for that. So they're very safe, they're very stable. Just like any other bond, they're going to pay you regular interest payments. They've got capital appreciation potential, just like any other bonds. They do have some tax advantages, especially for people in high tax states, because this is a federal investment. So the interest income from tips is subject to federal income tax. It's exempt from state and local taxes. These are also good for diversification, although market liquidity can be both a benefit and a risk. In 2008, there were some issues with long duration tip securities, but they bounced back in 2009. Now, the disadvantages of tips, they've got a lower yield than other bonds, and that's because they carry less risk. You kind of give some of that yield up for the ability to have your principal adjusted up or down to match inflation. Now, there's also the inflation adjustment taxation because that principal adjustment is actually subject to tax. So, if your principal value of your TIPS bond increases with inflation, that increase is taxable in the year that it occurs, even though you won't receive the amount until the bond is mature. Kind of stinks. And as I said, the principal can go up or down depending on inflation. So there's a real deflation risk to TIPS bonds that other treasuries really don't have. If you experience a deflationary crash, TIPS bonds aren't really going to help you that much. And they are, of course, a hedge against risk. You're probably not going to get rich on TIPS bonds, but they will help you secure your cash against inflation better than other kinds of treasuries. And you can see this at work in the global 60/40 portfolio over the past 26 years. So the first variant we're looking at here has intermediate treasuries, just the plain old Jane old intermediate treasuries. And the second version has tips. And you can see that during times of low inflation, the portfolios are tracking each other very closely. During slight deflationary periods with disinflation, you could see that the normal treasuries start really outrunning the TIPS bonds. But then when you hit a period of rate rises and inflation, well, TIPS starts catching up again and slowly pulling into the lead. So it works exactly as it's designed to. And it's this design that makes it such a great complement to a gold holding. So, simulating GDT is very straightforward. It's just 90% tips, 90% gold with the overnight borrowing rate and a 10% cash collateral. Backtesting since the inception of GDT, which wasn't that long ago, we can see that it's almost an identical match with our simulated ticker. Our correlation is 0.995 at the daily level. At the monthly level, it's 0.998. So, yeah, we can be really confident that we've essentially replicated this fund. And I love that because if you watch this channel, you'll know that I like predictability and I like the ability to see how an investment would have behaved over a deep time period. And by deep time period, I mean at least 20 years. So let's take a look at how this compares to just having invested 100% in gold and just 100% in tips and see exactly how combining these two assets can be very powerful. So we'll just give the back test a second to run. And as you can see, GDT Sim is really good. I mean, it stacks the result of gold and tips just as you would want for a return stack situation. But what's really interesting to me is not only does it increase the compound annual growth rate over just a plain gold investment, it does this while lowering max drawdown a little bit, lowering the average drawdown a little bit, lowering the longest drawdown a little bit, and at just a slight cost of a little bit more volatility. And that's why the Sharpe ratio is improved. It's at 0.62. So this is a really good stack. I think it's one of the most underrated stacks that people can make. And it's something that I've seriously considered for the Atlas portfolio. However, this fund is very young, and I kind of want to see if it survives and enough people take interest in it before I start using it in my strategies formally for a good chunk of my retirement investment. Because, yes, there is improvement over just a gold holding, but the improvement is very, very slight. Also, during periods of rapid rate increases, you need to be aware that holding something like GDT will mean that you're going to get slightly lower returns than just holding gold outright. This stack is a general purpose stack for reducing volatility and increasing returns overall. It's not going to work that way in all environment. It's going to work that way over a long period of time. To show you an example, right here I've got the most recent iteration of the Atlas portfolio, kind of teasing an upcoming video on this, yes, you can check my channel page and see that my investments in this have switched around a little bit. But let's see how it would look between Gold Sim and GDT Sim. And we're just going to look at the most recent period since the inception of return stacks RSST. So if we do this, you're going to see something surprising. The pure gold stack is going to slightly outperform GDT, even though in the long run, GDT is going to be the winner. Why is this? It's all about duration, right? TIPS is still a treasury bond. So if yields are rising, people are going to find tips that are being issued today more attractive than the tips that you bought yesterday because they have a higher yield and inflation's already underway. So that higher yield's going to be stacked on top of the principal adjustment, which means that your old tips bonds are still going to be a little less valuable. And that's why the main purpose of tips is that steady income. It's assuming somebody's holding the notes and collecting interest and not just constantly trading tips in and out, in and out, in and out. Well, I hope you enjoyed this episode and that it answered at least some of your questions about tips, in addition to getting into interesting funds from WisdomTree. Do you use tips in your investment strategy? Do you think the principal adjustment relative to CPI is worth lower yields? Let me know down in the comments. Oh, and don't forget to like and subscribe. And if you have any cool stories or tragilarious stories to share about your encounters with awesome shake style funds, just let me know. I think we've all invested in something that we've later regretted. Next up, I'll be doing a deep dive into my favorite US momentum factor fund, VFMO. I've also got an update to the Atlas portfolio slated for discussion. You won't want to miss it.